your pick as well. It's outside of the AI space, but it's AI related because of Agentic AI. Talk to me about why you're so excited about the retail space and AI.
So we think that agentic commerce is going to redefine the retail landscape. And
ladies and gentlemen, welcome back to the channel. What you just listened to was about a 10-second long clip from an individual that says we are not in an AI bubble. Now, I wanted to share that part of the clip at the start of this video because a lot of you guys are involved in RZLV AI. RZLV is really the leader in agentic e-commerce, okay? And while she doesn't talk about RZLV specifically, she does talk about why the AI market is nowhere close to in a bubble. And I found it interesting that she says the place she's most bullish on is not Microsoft, it's not Amazon, it's not the typical AI stocks that you would think, but the agentic retail names. And just wait until Wall Street starts to figure out RZLV exists. Okay. Pure play agentic AI stock, cheapest AI stock on the market, right there, trading at less than 3 times sales. Now, this video is not necessarily just about RZLV. Okay, what we're going to talk about in today's video is why I think we are headed for an explosive market in November, December, and really 2026. Now, I will say there's going to be some panic moments along the way, but I think you're really at the start of this AI revolution. And I know that kind of gets tossed around a lot, but you are at the start of the greatest shift in technology since the internet. Well, AI is a lot more applicable than the internet was at the early stages. Okay, at the early stages, it was very hyped and people could see the potential, but it was a bit of a free for all. And today's AI market is a lot different. Okay, we'll talk about why that is, but I do have a bunch of catalysts and reasons why I'm bullish over the next 12 months. I know a lot of people are bearish right now. I know there's been a lot of talk about an AI bubble, and I want to share my opinion on this. Now, the 10-second long clip or so you heard at the start of this video, we're going to play that as well towards the end of today's episode because I think you'll get a lot of valuable insight out of that as well. She goes over AI build out numbers and return on investment, things like that, to justify why we're not even close to in a bubble yet as far as AI. But I mean, let's just be honest. Like, some areas of this market got a little over themselves, okay? I think a lot of the nuclear names potentially got a little too far too fast, okay? Companies that aren't even going to be producing revenue for years, okay? But I think there's a lot of this market that is producing revenue, that is growing aggressively, that is really overlooked. Okay, like a lot of the stocks we invest in. If you guys want to come join that link down below, where we are going out and finding these under the radar hidden gems in AI, if you will. But I think you're going to see a lot more attention on AI over the next 12 months on a lot of the stocks that we invest in. They're going to get a lot more attention. And it's not just the AI story in and of itself, okay? Now, AI is alive and well. That is catalyst number 1 here, right? That is reason I am bullish number 1. AI is alive and well. See, you really have to take a step back, okay? Because if you're looking at this market or one stock in this market or one sector in this market, you might look at that and say, that looks like a bubble, okay? That's a fair thing to say if you're taking a very simplistic view of things. The reason I say AI is alive and well is because companies are being almost like forced into competing in AI. Do you think Google has a choice if they want to compete in AI? Do you think Microsoft or Oracle have a choice to build out, massive data centers to compete in AI? Not really. Because if Microsoft doesn't, Oracle will, and they will take Microsoft's Azure business. Same with Google from a data center perspective or a cloud perspective. These companies don't have a choice but to compete until something happens, until there's some kind of recession or AI, goes rogue or something. There's no choice but to compete. That's on a domestic level, okay? That's what's going to keep the dollars flowing. On a more macro level, this is an AI Cold War with China. So, there's outside competition also. And that's not going away anytime soon, okay? AI spending, investment, application of AI, it's not going away anytime soon. And you might see AI turn into a bubble, and it could be the bubble that never pops. Because, again, a bubble really means that markets get way ahead of the technology. Okay? Well, if we're in kind of a bubble, but then the technology catches up and the application of AI catches up, specifically, I'm thinking like robotics here, what kind of productivity increases that could drive for society, AI could be the bubble that never really pops, or not in the way that like the .com bubble popped. And then 10 years later, the internet is huge, right? Might be the bubble that never pops. Just think about it, okay? Number 2, earnings are strong with upside likely. This one's obvious. Companies tend to beat earnings. They're beating earnings. Earnings are strong. Earnings drive stocks, and there's likely upside to earnings. Okay. Why? Because the consumer will be strengthening next year. We've been in a rolling recession for a long time. Consumers have not been in a good place for a long time. Most of that has to do with inflation. The cost of living has just went up so much that even your inflation metrics, I don't think accurately, capture the way that average households are feeling, right? Average households are saying their costs go up a lot more than the 25% rise in inflation in the past 5 years. That it's just, it doesn't add up, right? And that's why you've seen a bit of a rolling recession. It's hit certain areas, and then it hit other areas, and then it hit, real estate, for an example. But I do believe the consumer is going to strengthen over the next 12 months. The big, beautiful bill, no tax on tips, no tax on overtime, tax changes, okay, very pro-business, pro-growth, should help that. 60 to 80 million Americans survive off of tips, okay? If you make $25,000 a year, the cap for no tax on tips, that is an extra $5,000 roughly of taxes you'll save. If you really do the calculation, it's in the $3,000 range because you'd still pay taxes on state and probably Medicaid, Social Security, just not federal, which is the largest chunk of your total tax burden, okay? So that's like stimulus for 60 to 80 million Americans, okay? But it doesn't actually start to do anything until about mid-year next year when people file their taxes, okay? So that's where a lot of Wall Street, I think, has forgotten about this, where I want you guys to remember this because it's something that will come up next year and help the economy and help the consumer. Now, real estate. This is something, again, a lot of Wall Street is not talking about right now. But as real estate begins to move, homes being bought, homes being sold, blah, 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 there's about 4 million homes that have been sold every year in this country. Like the 12-month annualized rate is about 4 million right now. If that could pick up to about 5 million, and let's say households take an average equity gain of, let's say, $150,000 to their bank account when they sell their home, that's $750 billion. $750 billion with a B. $billion. Okay? Of extra spending power. There's like, 340 million citizens. Let's say there's 160 million households. Again, that would be like each household receiving $4,687. Okay. Well, I'm trying to put this into context. Okay. People are going to get that money. They're going to do two things with it. They're going to invest it or they're going to spend it. Probably a mixture of both. So even if they spent half of $370 billion in potential equity realized gains, one, a lot of those are not taxed, especially if it's your first time home, first time selling a home. So they're going to have a ton of money. Okay. This is really a sleeper catalyst for the consumer. I think partially why the consumer is in such a weak place is because they're unable to sell or buy a new home. Okay. So even if we see a 20% boost to home sales next year as rates come down, which is catalyst number 4, Fed rate cuts, people are going to have a lot of extra spending money. Okay. And that's going to flow into the economy. That's going to help the jobs market. That's going to be a stimulus factor to basically everything. Help the AI trade. You get the idea, right? Now, number 5 is broadly cutting red tape. This will take some time to play out, but I do think this administration wants to compete in AI. They want to cut the red tape, okay? Make permits faster and easier to get, so on and so forth. So I think that's something that's working in the background, but it's going to be hard to quantify for maybe some years. Now, number 6 is clarity on trade. Now, the U.S. economy is very resilient when bad things happen. That's why we rarely go into recessions anymore. But uncertainty is even more damaging than, bad news or bad things happening. So just getting clarity on trade, getting a trade deal done with Canada, Mexico, China, Europe, which I think should be happening in early 2026 at the latest, is going to clear up a lot of uncertainty and allow for more investments to take place. Number 7, we will get a new bullish Fed chair. That's pretty obvious. And number 8, I believe inflation continues to come down over the next 12 months. All of this kind of circles back and feeds the beast that is this stock market. AI is alive and well. That's number 1. I put that as number 1 for a reason. That's not going away anytime soon. But as the economy gets better, as the consumer gets better, that helps the AI trade because that helps corporate earnings. About 80% of earnings are correlated to the economy and to the consumer. Okay. That's why personal spending, when we get those data sets, are so important because you simply cannot have good earnings and a terrible economy. If it just doesn't work like that. Okay. So all of this kind of circles into itself. I think real estate is probably the biggest kind of sleeper catalyst for this market and for this economy. Nobody's talking about this, but that's a lot of money households are potentially going to get next year. Like we're not talking about 10 million homes being sold next year, something, unrealistic. We're talking about going from 4 million homes in the worst real estate market we've seen in our lifetimes to 5 million. Okay. I'm just a little curious here. How many homes were sold in 2021? How many homes sold in 2021? There were approximately 6.12 million existing homes sold, the highest number in recent history, and an estimated 762,000 new single-family homes were sold. Okay, so in 2021 even, you had almost 7 million homes that were sold. I think we could get to 4.5-5 million homes get sold again. I think over the years, there's been a lot of people that want a new home, myself included, but don't want a mortgage payment that's 3 times higher than what it would have been in 2021, right? I know a lot of people bought their homes in 2021 for, let's say, $1,000 mortgage, and they're like, oh my gosh, if I were to get the same home today, it'd be $2,400 a month. A lot of people can't afford that, right? So, as rates come down, I do think that is a big potential boost to the economy. When I put all of this together, unless there's some kind of surprise catalyst that gives us a recession, as long as we don't have a trade embargo with China that lasts more than 3 months, I don't really see a recession. Thus, I don't see the AI bubble, quote unquote, popping. And that's why I'm aggressively investing my capital into this market. Okay. I share some of the stocks we invest in on this channel, but if you guys want to come see the stocks that we are investing in, the 20 plus stocks that I've identified as having exponential upside potential and what I view as limited downside potential, check that link out down below in the description of this video. Obviously, again, not a financial advisor, not a financial planner. And I do even think into the end of this year, after tomorrow's CPI report shows what I believe is going to be a very weak inflation environment. I don't think we're going to have a bad CPI report tomorrow. As long as I'm correct on that, then you could start to see a pretty easy path towards this market hitting 7,000 or 72, 7,300 by the end of this year, as some Wall Street quote unquote experts like Tom Lee have suggested. Tom Lee said 2 days ago, the bare minimum for this market by year end is 700. That's only about 4% upside from here, but he said markets could extend to 720 or even 730. On the SPY, which 730 is an 8.5% move higher, 720 is a 7% move higher. CPI could catapult that move. And I do think you're going to see a rotation back into risk on. A lot of stocks that have, maybe started to underperform a little bit in the last 2, 3, 4 weeks. I think those could be areas that are primed for an acceleration again. Now, take a listen to this clip on CNBC. It was posted today. It says, quote, "We are not in an AI bubble."
Why don't we start with your word of the day? It's boom. What's booming?
So this is in contrast to bubble. We are not in an AI bubble, in our opinion, and we think that this narrative can be dismantled by both the demand-supply imbalances that we're currently seeing, as well as the ROI on accelerated compute. So, bubbles are characterized by overbuild, oversupply, too much investment, inflated multiples. We're not seeing any of those things right now. In fact, we're in an acute supply-constrained environment, which we think persists over the next 3 years. And we're seeing this in the companies reporting this week. Yesterday, Amphenol grew its data center revenues 128% year on year. Vertiv's orders grew 60%. And when we think about this opportunity, it's a $4 trillion data center infrastructure build out through 2030, which is 80 gigawatts. 1 gigawatt is a $50 billion opportunity. Only 6% of this so far on our numbers has been deployed. If we include all the projects that have been announced, and there have been many of those over the last couple of weeks, that only takes us to about 65% through the build-out by 2028. So we still got 35% of this build-out to be announced, and we still haven't seen the earnings and the revenue acceleration from that 65% build-out. So we've got that to look forward to. And the final point on ROI is that this is accelerating. So traditionally, if we take a NVIDIA Hopper architecture over the last couple of years, the ROI has been around 10x. We've now moved to a 15x ROI using the Blackwell architecture. So this spend is justified.
Okay. You see a boom in the whole AI trade. You're naming some different stocks, but I wanted to let you get through that because you say right now there's 3 stocks that you don't even need to own, even though you're very optimistic about AI. And I think it's a bit surprising. It's Microsoft, Amazon, and Google, the hyperscalers. You don't even need those stocks? So it's just a Mag 4 in your mind?
So what we see with technology platform transitions is that the competitive landscape gets reshuffled. We see this time and time again, and we think 2025 marks the start of the changing of the guards, where we see new market leadership on the table. So Microsoft, Azure, AWS, they're losing market share to CoreWeave and Oracle for AI workloads because these are purpose-built for accelerated compute. Amazon's retail business faces faster growers in the likes of an Instacart or a Shopify. Google is under siege from OpenAI in terms of paid search click growth, which is deteriorating for the first time in a decade. So we'd far prefer to be owning the winners of this next technology cycle, which are AI native from the outset.
All right. I want to get to your pick as well. It's outside of the AI space, but it's AI related because of Agentic AI. Talk to me about why you're so excited about the retail space and AI.
So we think that Agentic commerce is going to redefine the retail landscape. And there's a lot of talk about how OpenAI is going after Google. We think what doesn't get enough attention is the threat that OpenAI and others pose to Amazon when it comes to agentic commerce, because Amazon adopts a walled garden approach. They're very, very unlikely to allow a third-party agent to crawl through their site. In fact, they're writing their AI policies right now to make it harder.
Shopify. So you're saying Shopify is using agentic AI in a way that's going to threaten Amazon's dominance?
Absolutely. So Shopify is positioning itself to be the agentic rails for e-commerce. They inked a partnership deal with OpenAI. And I mean, there are three things that you really need to be the agentic rails for commerce. You need the inventory, you need the real-time price discovery, and you need trusted payments. And Shopify's got the highest converting checkout on the internet. And so what matters here, it's not about how big the company is, so Amazon doesn't have an advantage. It's about the end-to-end technology stack and consumer intent. You've got to be where those consumers want to buy.
Let me know your thoughts on this down below in the comment section. Again, this is one of the rare opportunities that you're probably never going to get another opportunity like AI in your lifetime to invest in. Okay, it's probably never going to happen ever again. There's not going to be something bigger than AI that comes along. It's just not going to happen. Now, there's going to be adjacent industries. Like robotics is going to be a big trade in AI eventually. You know, maybe it's Tesla, maybe it's the next stock, who knows. There's going to be adjacent AI trades, but as a collective, like AI is the holy grail of what's going to ultimately make you a lot of money. You know, that's what's going to make you rich in the next 10, 20, 30 years. Like a lot of people got rich during the internet. Okay. If you were not invested then, maybe you were too young, maybe you weren't invested. AI is that opportunity. And I think it's going to take a lot longer to play out than most of what Wall Street thinks. Like the guys that really think AI is in a bubble right now, I think are honestly asleep at the wheel. So let me know your thoughts on all of this down below in the comment section. Hit the like button as well as subscribe to the channel if you have not done so already. Have a great rest of your day, and I will see you in the next one.